Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Monday, December 12th. Global stocks are moving lower, and U.S. futures are pointing to a moderate sell-off when the market opens. Investors seem to be reevaluating the enthusiasm they felt last week when Eurozone leaders announced measures to address the sovereign debt crisis. All members of the European Union, except for the United Kingdom, agreed to a new intergovernmental treaty that will make tougher fiscal rules binding and include automatic sanctions against countries that exceed their deficit limit. Analysts say the plan may help prevent future debt crises, but it does little to solve the short-term problems of high borrowing costs for heavily indebted Eurozone nations such as Italy.
According to Moody's Investor Service, the new measures may be too little, too late. The agency said it still intends to revisit the ratings of all EU countries during the first quarter of the next year. Moody's noted the, quote, continued absence of decisive policy measures and said the debt crisis remains in a critical and volatile stage. The announcement comes after Standard & Poor's put 15 Eurozone nations on watch for a possible credit downgrade. This morning, the firm's top European economists said S&P wanted to send a strong signal that the region is at major risk of recession and a credit crunch. He said it might take another shock, such as trouble at a large German bank, for people to realize that it's not just the peripheral Eurozone nations that are at risk of a contagion, but the core countries as well.
As traders question the effectiveness of the Eurozone's New Deal, they're moving away from assets viewed as relatively risky. That includes stocks, of course, but it's also true of commodities. Right now, crude oil is dropping by about $1, approaching the $98 a barrel mark. And even gold, which is typically viewed as a safe haven, is falling back below $1,700 an ounce. The euro is also taking a beating this morning, losing ground against its major rivals in the currency markets. It's now dropping well below 133 against the US dollar. The Japanese yen is also showing signs of strength, since it's also seen as one of the safest investments in the currency markets. Many investors are also searching for safety in U.S. Treasuries. The yield on the benchmark 10-year note is dropping back toward 2%.
On the corporate front, it could be a banner week for initial public offerings. 11 companies are scheduled to debut on Wall Street, which would make it the busiest week for IPOs since November of 2007. Leading the charge will be the social gaming firm Zynga, which produces the Farmville and Mafia Wars games. It's set to raise as much as $1 billion, which would make Zynga's offering the biggest internet IPO since Google's launch in 2004. The calendar also includes Jive Software, which helps businesses set up their own social networks. And from the retail sector, we have Michael Kors Holdings. It's offering nearly 42 million shares at a range of $17 to $19 each. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.